Private markets are just they're opaque. There's so much room for fuckery that like it could derail everything. I don't think that the vehicle that this legislation produces gets us anywhere closer to that goal. I think it gets us into a world of hurt, actually. We can be patient. We're not children. If we bring private companies into 401ks, we're not going to know what we own.
Here we are, back again, back again. Your brother and sister and your two best friends.
I'm swearing a lot this episode.
You are. You're
saucy.
really.
I don't like Wall Street fuckery, man.
Amped up.
Hey, everybody. Welcome back to Money Grooves, brought to you by flankinvesting.com. I'm David.
I'm Elliot.
And today we're going to be talking about one of the most underreported stories going on in finance right now. And that's how private equity is trying to sink its vicious teeth into your retirement account.
Vicious. Get them out.
Get them out. So on August 7th of this year, President Trump signed an executive order titled Democratizing Access to Alternative Assets for the 401k Investor. What the intent of that legislation is to open up 401k type retirement accounts to alternative assets, such as private equity, private debt, real estate, infrastructure projects, commodities, and even digital assets, which what they mean by that is cryptocurrency.
Right, because today my 401k account is just stocks traded on the market, right?
Yeah, it is right now. It's really just publicly traded stocks and treasury bills and debt, right? There's bonds in there. Do you know the difference between a stock and a bond?
I don't, actually.
Yeah, so it's really simple. The difference between a stock and a bond is stock is literally just you getting equity, you getting ownership in the business. A bond is you buying the debt of a company. So
Sure.
you're buying the debt. So if, like, say I have Dave's Lemonade Stand
Sure.
and I want to raise money and I don't want to sell any ownership, I'll sell bonds instead. And when there's a bond, you get something called a coupon, which means how much am I going to pay you for buying my David's Lemonade Stand?
Sure.
How much interest am I going to pay you?
Right.
That's called, for you, for me, it's called debt interest. For you, it's called the coupon.
I've heard of public governments using bonds to fund projects. So basically, public governments say, we don't have enough money to work on this road, but we want to. So they put their debt out on the market, and private investors come in and buy it up and say, okay, great. We'll loan you that $1 million you need at a 5% interest, and you'll pay it back over the course of 10 years.
Yeah, exactly. And
Cool.
and in our first episode, we talked about T-bills and like how I have, a couple $100,000 in T-bills right now. Buffett has $300 billion in T-bills right now.
You'll get there one day.
That day's a long way away.
You'll just use AI to help you.
Yeah, exactly.
Yeah.
But all a T-bill is a bond issued by the federal government. And it's when you're saying T-bill, you're really talking about most of the time you're talking about a short-term government bond between 1 and 3 months expiration. So this bill is basically this executive order is saying that, hey, instead of just having publicly traded companies and bonds in there, let's add everything else. Let's add private equity.
Yeah.
Which private equity is a business that's not publicly traded, right? And there's some really important things that we'll get into and how that can really, really get out of control very quickly.
Especially for somebody whose investments are kind of on autopilot, like a 401k. Like most people are just picking the risk level, and then the firm does it all for them.
Yep, exactly. Yeah. But it's important to say at first that this executive order doesn't change anything. Basically, the executive order was just saying that the president is just directing federal agencies to revise regulation and guidance. So he's saying, hey, take another look at it. So there's no action items today that you can't put private equity into your 401k today, but all of the federal agencies who oversee this stuff are taking a look at it. And Wall Street is very, very happy about this. Here's the CEO of Apollo, one of the largest private equity companies in the world.
The private markets are opening to the public, and one company is at the center of this seismic shift, Apollo Global. Its CEO, Mark Rowan, says the next great investment frontier lies not on equities, but in the vast private markets that underpin the majority of our economy. He sat down with us and gave us an exclusive look at how alternative private investments will soon find their way into the public's hand. This is Inside Alts.
In that interview, he had something really specific to say on why it's important that this legislation gets passed and that people can invest in private markets in their 401k. Here's that clip.
How we used to invest, active management, we would choose those who produce good returns. The reality is active management is very hard. 90% of the equity market participants have failed to beat the index for 20 years. It's tough. We've moved to a passive world, we've moved to an ETF world, we've moved to everything being indexed and correlated. And if you want real diversification and you want returns, you want to participate in 80% of the economy and 80% of the job creation, you now need private markets.
What he's saying there is that by actively trying to pick stocks, that most investors fail when they do that, which is 100% true.
Right.
My thesis isn't that 90% of people fail to beat the market because the markets are perfectly efficient, right? That the pricing on it is always correct. My thing with it is that people don't invest in what they know. They don't have a framework on which they actually study things. Right. They don't stay within their circle of competence. It's not that there's not a problem with the markets. And the idea that you need to introduce the private markets to make that dream come true, it's bonkers to me. Here's the biggest problem. First, do you understand the difference between a public and a private company?
I do understand the difference between a public and a private company. I've worked for public companies. I work for private companies. I understand that part of it. What I don't understand, though, is a public market and a private market and how private markets can get into my 401k.
Yeah. Right now they can't, right? Because if you were just on the street and you just wanted to buy, I don't know, if you wanted to buy the Italian restaurant that's right around the corner from your house, right? You couldn't invest in that. You would need to you need to
talk to the person and be like, I want to give you $10,000 to help run your business. There's no systematic way for me to go about buying ownership in some private company.
Yeah, exactly. The big change that's happened over the last 20 years is that the private markets are extremely well funded now.
Yeah.
It used to be as companies grew, they would go public really early on.
The goal. IPO.
They would IPO almost immediately. But now they're staying private a lot longer.
I've actually noticed this. The companies are getting rather large and still being private.
Yeah, the fact that Stripe is still private is insane.
Great example.
And it also robs us, right? It robs us as the individual investors.
Of the opportunity of investing in something great.
Yes, and that's my problem with this, is that so people who say that we should allow 401ks in private market, we should expand access to individual investors to the private markets.
Sure.
They would say that, hey, we've been left out. Like individual investors, people who aren't in private markets, have been left on the sidelines as all this growth has happened. Like SpaceX is a private stock, is private company. OpenAI is private. Like there's some companies that are changing the world, and we cannot, go along for the ride with them.
It's also not equitable in that when private companies were small, it was justified, like a group of people profiting off of a business, right? It's not equitable, in my opinion, for a small group of people to have exclusive control over an entity that is getting larger and larger and larger and more impactful, as you say. Like, at some point, it becomes an ethics thing where you say to yourself, this organization is having a massive impact on the lives of many people globally, potentially, yet it remains that ownership of it and getting value from it remains in the hands of a relatively small few. So then it's becomes a question of opening it up, right? Letting other people participate and have some ownership. Yeah,
and right now the SEC guidance for who can invest in a private company it's a really weird system. So I've invested in private companies before. The way that I've done that is because I'm an accredited investor. The requirements to become an accredited investor are stupid.
There's no need to brag, David.
Yeah, well, it's stupid. It's basically the requirement to become an accredited investor is, do you have money? And the actual numbers are you need to have $200,000 if you file. You have to show proof of $200,000 in salary if you file taxes single, or $300,000 if you file taxes jointly for 3 years. Or you have to have a liquid net worth of over $1 million, or not liquid, just a net worth of over $1 million. When I went to buy my first private company, I had to show proof of accreditation. My CPA didn't even know what that meant. They were like, and I had to go to a third party to issue my letter of, to give me like a stamped letter of, to say, hey, yeah, this guy's accredited. So it's a stupid system, and I completely agree that it needs to get changed. You shouldn't have to have money to enjoy what Mark Rowan said, 80% of the market, right? 80% of companies are private.
Wow. That number is staggering.
Yeah. So we need to change that around. But the solution isn't to keep to give us access to private companies. It's that we should make more companies public. And there's a bunch of reasons why this makes sense. First off, in a private company, you have very little insight into what's happening at that company. You don't, the first thing we do when we look at how a business makes money is we go to their annual report. You know who doesn't write annual reports? Who's not obligated to write annual reports? Private companies. You know who's not required to report revenue, net income, their balance sheet, their cash flow statement. Those compulsory reports are not required for private companies. Now, the other side of that is people would say that allows them to focus on the long term. That means they're not worried about, making next quarter's goal, and I get that. I'm sympathetic to that. Right. But if Palantir is any example of the ability for individual investors to be patient, that's the glowing example. We can be patient. We're not children. Like we are the everyday. One of my core beliefs is that the everyday investor has the capability to be a good investor, a good long-term, patient Buffett-style investor. I think everyone is capable of it. I actually think it's a natural behavior. Yeah. But the system and how Wall Street profits off of us makes it very hard to do that. So that's my major beef with all these. That's my major beef with this is that if we bring private companies into 401ks, we're not going to know what we own, right?
True.
And and then you get into like your fiduciary requirements, right? If you're an asset manager and you have a fiduciary, some do, some don't. If you do have an asset manager, you need to make sure they have a fiduciary responsibility to them.
Yes,
that's basically them saying that they will put your needs before their own.
They do well when you do well.
Yeah, exactly. Yeah, and there's problems there. I got a lot of problem with that group, but that becomes a very, very big question here. So I want to say that I'm really in support of private market expansion, but I don't think that the vehicle that this legislation produces gets us anywhere closer to that goal. I think it gets us into a world of hurt, actually, because if I'm just an everyday Joe, I'm really good at making tires. I have a tire business, and I just do that, and I don't want to think about companies. I don't like studying businesses. I just want to put it into my 401k.
Right.
Well, if there's private companies in there, if there's private equity in there, the fees are going to be way higher. Most private equity companies run, it depends, it really depends, but it's not uncommon to see a 2 and 20 model where they take 2% of any sort of, they take 2% of the base capital and then 20% of all profits. Wow. Which is, it's almost impossible to beat the market with a 2 and 20, which is why like 95% of hedge funds, which that's really the 2 and 20 came from the hedge fund world, and then private equity was kind of like, ooh, we can make a lot of money if we take that.
This was great.
Yeah, but the hedge fund world, like taking that fee and applying it to everyday returns, it's almost impossible to beat the market under a 2 and 20.
Sure.
So I don't like it because I think it breaks the fiduciary responsibility. It adds a ton of opaqueness to what do I actually own? Like, how do I know that this company is actually any good or making any money? So the ability to introduce grift and scam into the market goes way up with this. So instead of making instead of allowing private companies into 401ks, make companies go public. Have some sort of like. Right. For SpaceX, right? They have so many government contracts that we as the taxpayer are helping them build their business, but then the everyday taxpayer
has no idea what's going on.
Yeah, and they can't enjoy the ride. Yeah. They can't invest in SpaceX, even though they see Starlink and they see all these cool things going on. Yeah. But and that money is being made primarily off of U.S. contracts. Yeah, So why can't we why can't we join that? Right. Instead of letting us get the private one, just have the company go public earlier, and that should be more commonplace in the market.
Do you think there should be a point at which? Do you think there should be stricter rules about when you must go public, or what are your thoughts on that?
No, I am a free market guy, but also I think there should be extreme tax disadvantages. Like if you're receiving public funding from the taxpayer, you should be a public company.
Sure.
Like we're the ones supporting you. Sure. If the U.S. government's giving you money, then there should be some friction points if you're not a public company and you're getting money at a certain threshold, right? If you're making tens of millions, billions of dollars a year, then why the hell are you not public? It shouldn't. And the reason is because the private markets are so well funded now.
Right. And you don't have to write annual reports.
Yeah, exactly. And frankly, you can throw the companies that I've worked with that are private companies throw the best parties.
Oh,
because they don't have to report OpEx.
Killer parties.
Yeah, they don't have to report operating expenses. It's all just a black box.
Well, in that case, I'm only investing in private companies from now on, so I can go to the parties.
Go to the cool parties.
Yeah, right. Yeah. Just don't care. When's the party?
Yeah. Won't make any money, but. And then around the opaqueness, Mark Rowan almost defeated his own logic in that interview, and we'll roll that clip now.
But how do investors invest? Do investors buy stocks today? Or do they buy indices? Do people actually do the work? I don't think so. And so there's not that there's no information. There's just less information.
That was such a scam. It's not that there's no information. It's that there's less information. And investors don't do the work today. Yeah, they do.
Yeah.
That's literally you just trying to get your high fees into people's 401ks.
And make them seem reasonable.
Yeah, and he's going to make a fuck ton of money off of doing that.
Sure.
So yeah, that he defeated his own logic and he walked it back. That was bad, Mark. Bad. I'd love to meet you. You're a very good investor. You're very good at what you do.
Very good at what you do.
Yeah, but bad. Speaking of doing the work, if you want to do the work, you can check out flankinvesting.com where we do the work all day and you can see all the analysis I write. That's the future that we should have, is that as we get more time, as AI builds out and we have more free time, we shouldn't just be letting some asset managers run it and just hoping and praying that they're doing the right thing for us and not getting us over our skis. We should understand what we own and why we own it. And we should be able to look at it. We should be able to do the work if we want to do the work, or we should be able to have our systems where we can evaluate these things on our own. We're not idiots.
So your take is private markets coming into things like 401ks, not a bad thing, but we need more transparency from those private markets and from those private entities so that we can really understand where our money is going and what they're doing with it.
Yeah, actually, that's a good way to say it. It's not so much my beef with private companies going into 401ks. It's that the reporting requirements are so opaque. That's the right word. You just don't see what's going on, so you don't really know what you own. If the reporting requirements for a company entering a 401k, if private equity was entering it, I'd be more understandable to that. Like, it'd be like, okay, let's have, but then why not just go public? This system was created over 100 years ago, and it works. We've seen, we've had incredible wealth growth as a nation, right? It's concentrating, which is a problem, which is the mission of Flank, to tangibly reduce the wealth gap. But it's an incredible. The public markets are an incredible way to really economically lift a nation. It's not the private markets are just they're opaque. There's so much room for fuckery that it could derail everything. If you want to see a major crash, I mean, can you imagine if Enron was private? We were able to see Enron's scam coming on. There were investors who shorted. Jim Chanos shorted the shit out of Enron because he could look at what the company was saying that they were doing, and he went, "That doesn't make sense." But if he couldn't see that these numbers versus what they're saying, and he didn't have, public companies are required to report anything that happens material to the company. So you know what's going on. It's public, right? If Enron tried to do that and they were private, that scandal probably could have gone on another 10, 20 years. And then they at one point, Enron was like the 4th largest company by market cap on the public market.
Wow.
That fallout cost investors hundreds of billions of dollars. And it could have been worse. It could have been way worse if it was in people's 401ks. It'll make the great financial crisis look like a fucking speed bump. So yes, us as individual investors, we should be able to enjoy the ride up. Why can I not buy Anduril stock? Why can I not buy? And I can. There's secondary markets, and I'm an accredited investor. Why can't you buy Anduril stock? Why can't you buy Stripe?
Why can't I buy it? I want some.
But that's the thing that needs. And we have a mechanism to do this, and that mechanism is the public markets. So the SEC doesn't say this is the public market, this is the law. They have law. There's laws that guide what a public company has to do. But if the New York, the actual stock markets are the New York Stock Exchange, the NASDAQ, there's a bunch of other smaller ones, but those are the two main ones in the U.S. If we have a problem with quarterly earnings, or if we have a problem with, if the thesis is that the public markets don't support long-term strategy for a company, if that's your thesis, then let's rework how how public markets work.
Right.
Let's have. We don't need market makers. We can have an illiquid stock market. That's what private equity is. Private equity is extremely illiquid. The fact that Wall Street is trying to have their cake and eat it too, they're trying to do the right thing. They're trying to expand access, but they want to keep their fees. They want to keep the opaqueness. They want to keep their ability to do fuckery.
Can't have your cake and eat it too.
Yeah, Wall Street.
Right. Well, speaking of wanting to invest in private markets, I'm excited it's happening because that might give me the opportunity to finally invest in something that I want to invest in.
What are you interested in?
Our next topic, Lady Gaga. So, David, in keeping with my interest in kind of brands and pop culture and celebrities, I just went to the Mayhem Ball. I'm freshly back, and
what's the Mayhem Ball?
Oh, the Mayhem Ball. The Mayhem Ball is Lady Gaga's latest tour for her album called Mayhem. All of her shows are balls, so this is her latest one. I'm fresh back from the tour, and all it served to do was reinvigorate my love for Lady Gaga. Let me tell you a quick story. Have you heard what they say about gay guys and pop divas?
No.
Well, they say, legend has it, that when gay guys are made at the Rainbow Factory, you're assigned a pop diva, and that is the person you will follow for life and go to war for. For some, it's Madonna. For some, it's Cher. For some, it's Beyonce.
Mine's St. Vincent.
Okay, great.
Yes. Yeah.
For me, it's Lady Gaga. So I've been a fan since 2008 when she kind of first came onto the scene, and I wanted to go through some of her kind of career, where she started, how much money she's made, and also how she's diversified as she went through.
And can you invest in it?
With the ultimate question of, can I invest?
Can you wet your beak?
More than I already have by buying all these tickets. So let's start with her early career. So as you guys know, as many people know, the Fame was her first album. That album listed two big hits, which were Just Dance and Poker Face, among many others, but those were really the two notable ones. Shortly after the success of Just Dance, Gaga did capitalize on the popularity and license it to a few different TV promotions. After that, she went on the Fame Ball Tour, which grossed 3 million ticket sales. This was a small but very important start from her success with a single and from her success with the tour, also merchandise, promotions, things like that. Gaga in 2010 owned about $62 million, according to Forbes. But things really exploded when she came out with her album, The Fame Monster. This has the songs that people really, really, really know. And it also launched into one of her biggest tours ever, which was the Monster Ball. This brought in $227 million of revenue compared to her initial tour, which brought in $3 million, remember. This was actually the highest grossing debut tour by a new artist. The next album she released was called Born This Way, which is considered her magnum opus. So this album was a huge success. It sold about 8 million copies worldwide, and it also launched into the Born This Way Ball Tour. And that grossed about $183 million worldwide. In 2012 and 13, she was actually named Forbes' highest earning celebrity under the age of 30.
Wow. It seems like that touring is really how she makes most of her money.
So up until this point, touring was definitely the way she made most of her money. She did do some other things, and obviously, the merch comes into it. She released a pair of headphones when the Fame Monster came out, but touring was her main moneymaker during this time. After that, though, she started diversifying. Number one, she broke into entertainment. You recall her on American Horror Story. She was on a season.
Oh, yeah.
She was on the hotel season. Made quite a bit of money there, about $2 million per episode.
A Star is Born, too.
And then, her huge intro into entertainment was A Star is Born. She also co-wrote the soundtrack, so she made tons of money off that. And in addition to getting into entertainment, she also continued to expand her endorsements, doing things with Tiffany & Company, and also doing things with Dom Perignon. She did a collab with them, and those were estimated to be about 6 to 7 figure deals.
Oh, wow.
There is one last thing that I want to mention, because this is one of my favorite things that people do. I think it's so smart. In addition to all this, Lady Gaga also has House Labs, which is a line of cosmetics. I think it's a great thing to do because it's a really high-margin business. It's really easy to get distribution, and and your brand is everything in that, right? You can infuse your brand into it in so many different ways. So I think that cosmetic lines are such a smart thing for any celebrity to do because I think they're a home run. It's estimated that she makes about 10 to 30 million annually on this.
Yeah, and this goes back to our problem with private companies, right? Is because we don't know, right?
We don't know.
So
right.
if someone were to say, do you want to buy House Labs? Your answer would probably be, yeah, I'm interested, but show me the numbers. Show me what's going on here. Right. And that's the problem. And we're about to introduce the current administration is trying to get this into our our 401ks, our retirement accounts.
Right.
Some of the things that we depend on as we get older and can't work anymore. How that the fact that we're going to add that risk to those accounts is. It's risky. It's not gonna. That's kind of a FAFO kind of situation.
Right. So I was interested in context as I said, okay, great. Lady Gaga's had a great career. How can I invest? I looked into some options for investing in Lady Gaga. Unfortunately, the short answer is no. Pretty much all of her holdings are private. But there are some interesting things that some suggestions that I found. So number one, you could invest in her label, which is she releases under Interscope, which is owned by UMG. UMG is based in Amsterdam. So I wanted to ask you, what does that look like for me as a U.S.-based investor?
Yeah, that's a great question. So, and normally, if you've watched the show for any amount of time, you'd know the next step we would do is we'd pull up the company on Flank, right?
Pull up Flank, look at the PE ratio.
Yeah, start looking at the metrics, looking at the business. And the way you buy a foreign company, you have a couple different options if you wanted to buy UMG. Your first option is to open an account in that market. So if I wanted to buy a Japanese stock, I could open up something on the Nikkei stock exchange. And then your other option is, but the U.S. markets are the largest by far in the world. And so what other foreign companies do so that they can get into the U.S. market easier is they do something called an ADR. And that's called like an American Depository Receipt. I said that without looking it up. I don't think I'm wrong.
Very impressed.
I hope, yeah. But what ADRs are is it basically is just they carbon copy all the things that they have to report to their own exchange, and then they just put it over into the U.S. markets.
Cool.
But it's not on the two major U.S. stock markets are the New York Stock Exchange and the NASDAQ, right? This actually goes on a third, one of those minor markets called the OTC, over-the-counter markets. Over-the-counter markets OTC markets are a mixed bag. In one respect, you have ADRs. You have foreign companies that you'd want to invest in, like Volkswagen. You have to buy that through the OTC markets. But on the other side, you have what are called pink sheet companies. And
I've heard of these.
Yeah, have you ever seen The Wolf of Wall Street?
Yep.
That's a pink sheet. That's a company that has no real revenue, has nothing of substance, but you can find people who will hype the shit out of it and then they'll rug pull it, right? It's crypto scams before crypto scams were a thing.
Crypto scams over the phone.
Yeah, exactly. Yeah. So Flank made the decision to not host OTC markets, the OTC market at first. We'll eventually. If you subscribe to Flank and we have more revenue, we can have the development team to get that data onto our platform. But right now we don't have the engineering assets to get that on. But and because it comes with that mixed bag. I don't want to put pink sheet markets on or pink sheet companies onto my platform and say, hey, we should study these.
Yeah.
But it'll be there eventually. But that's what you have to do to buy UMG. Are there any other ways that you could wet your beak with Lady Gaga?
Sure. So there was another one that I found that I thought was very interesting, which is called an SEC qualified platforms and funds. One of them is called KBX, and I'll read it off the screen here. SEC qualified offerings of song royalty shares launched for retail in 2024. So basically, you're buying shares of songs that the revenue comes from things like streaming on Spotify. It comes from radio. It comes from sync. Doesn't sound like a super smart investment, but I am interested in learning more about it because it's just so random.
David Bowie in the 1990s, I believe, issued something called Bowie bonds, where he needed capital. He needed to raise. Remember, we call it the difference between a stock and a bond.
Yeah.
The bond, bond is just debt. instead of he went to institutional investors and said, I will give you a cut amount, your coupon. So I will pay you back in full so I can produce this album in the way that I want to produce this album. And he released something called a Bowie bond.
If Gaga did that, I'd be all over it.
Yes,
absolutely.
No
problem.
Well, unfortunately, Bowie only released it to institutional investors. He didn't introduce it to the everyday individual investors like us.
Well,
can't really fault. It was the 90s.
It was the 90s.
It was harder to do that back then.
You could just tweet, be like, Bowie bonds are live.
Yeah, exactly.
All of this link.
I think the way that you could actually get, I saw in my own research that her shows are produced by Live Nation.
Sure.
We talked about Live Nation in our second episode.
We did, yeah.
So there's a whole bag there. We made a video on Live Nation's. I released a flank post on Live Nation's miraculous flywheel, but also how it's kind of a sketchy company, and I'm staying away from it for right now. But that name keeps popping up. They've done a really good job of getting deep in the stack for any sort of live production.
Well, and I mean, while Live Nation may have some problems, and really the whole touring industry does have some problems, I think that artists are going to continue to tour. For example, Lady Gaga, despite all of her multiple diverse revenue streams, her highest grossing investment is still herself in the form of touring.
Yeah.
She still makes the most money from touring. So I really think that a great way to invest in an artist is to invest in their live shows, because if they keep coming out and keep doing well, you're going to make money. That's probably the way that I would invest, either that or via her label. If something became public, like if House Labs went public, or if even the House of Gaga, her kind of creative agency, went public, I would invest in those. But until then, I would invest in Live Nation or her record label, probably.
Lady Gaga, go public, lead the charge.
Go public, we'll buy it.
Throw it in Wall Street's face. We don't want to own private companies that we don't get to look into. We want to be able to look into the companies. We want to understand what we own as individual investors. Don't try to pull wool over our eyes. Gaga, you're our only hope. That's all for today's episode. We went from talking about new introduced legislation that's that has the potential to cause a great catastrophe, all the way to the economics of Lady Gaga. Really hope you enjoyed it. We're still new to the format of this show, and we're trying to figure out what works, so please let us know what you think in the comments below. Thanks again so much for watching, and we'll see you in the next one.